Hey there, everybody. Thomas Wood with ValueCharts.com. We're going to go ahead and take a look at crude oil, and more specifically, using the cycle finder indicator and how you use this to profit from price moves. And it worked really well this morning in crude. We had long and then reverse and short, and another reverse and short, or long and reverse and short that both worked out really well. So first thing first, this morning, crude was all the way down. We had on a 240-minute basis what we call a no return, which is where we go undervalued. So we are oversold to the downside, but our momentum is bullish. Okay, so we were undervalued or oversold with bullish momentum. So we expected crude to get back up and retest the highs up around 47.5. So because we knew we were bullish, what we do is we wait until our cycle finder, the indicator down here at the bottom, changes to an up cycle. So right here, you can see on this price bar, it changed to an up cycle because our blue line crossed above the zero line. So this is using a 5-minute chart, and we crossed above the zero. So you're buying on the open of this bar, which was at 46.80, call it. And then your cycle stayed bullish all the way over until right here. When we cross back below. So you're in it from 46.80 and you're out of it at about 47.40. You're talking about $600 a contract to the upside, so not a bad move. And if you are using the highs of the day as your target, that was around 47.50, 47.57 is what it was actually for the night session. That gives you about $770 a contract worth of profit. So not a bad trade there. And then our cycle reverses. And as of this price bar here, we cross back down below the zero line. Which it means it's entering back into a bearish cycle. So you sell off from the open of this bar at 47.20 basically, and we came all the way down to a low before bouncing at 47.80. So that's about $400 a contract worth of move before we bounce back up. We had a minor upcycle that failed. So it failed the upcycle and then reversed, and we had a head and shoulders here on our tick charts. You could see it really well on tick charts. And if you were in the trading room, you know we were saying it was a short below 46.89, and then again a short below 46.81, and both of those worked out fairly well. You've stayed in a down cycle all the way until where we are right now, which is at 46.60. So you're talking another 200 and some change to the downside worth of a move. Now, one thing that's important to note about what's happening today, it's kind of been whipsawing, and one of the reasons behind that is because we have FOMC today, which is going to affect a lot of markets. And since it affects the dollar, it'll also have a roundabout effect on crude oil prices. So keep an eye out for that. That's today at 2 p.m., which we'll be trading that in the trading room as well. But that's all I have for you for today. I hope it helps. I will see you in the trading room next time. Also, make sure you go to ValueCharts.com and join us. You can do the academy. Go through the Value Charts Academy. It's a free training. It's basically a lot of the fundamentals of trading, a lot of things that traders overlook when they first start trading, and they don't realize that they're very important things to do. But we talk about risk management, we talk about reward risk ratios, that type of thing, putting together a trading plan. So you can go get that by just going to valuecharts.com, and you just put in your email address, create an account, and you can get it. Doesn't cost anything. So that's all I have for you for today. I will see you in the trading room bright and early tomorrow. And until next time, happy trading.